Removal of fuel subsidy and streamlining the exchange rate for competitive economy, says President Tinubu. World Bank to unveil debt payment pause for countries. The Federation Account Allocation Committee shares revenue for the month of May. Plus, oil resumes slide this Friday as global stocks bleed. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar, your guide. It's good to have you join us. Let's bring you up to speed with business development. The Federation Account Allocation Committee, FAC, has shared 786.161 billion naira May 2023 Federation account revenue to the federal government, states and local government councils. Statement by Director, Press and Public Relations of the Ministry of Finance, Bao Mokwa, says this was contained in a communique issued at the end of the Federation Account Allocation Committee meeting for June 2023. Chaired by the Accountant General of the Federation, Dr. Oluwatoyin Maiden. The statement said the 786.161 billion naira total distributable revenue comprised distributable statutory revenue of 519.545 billion naira, distributable value-added tax revenue of 251.607 billion naira, electronic money transfer levy of 14.370 billion naira, and exchange difference revenue of 0.639 billion naira. In May 2023, the total deductions for cost of collection was 38.238 billion naira, and total deductions for transfers and refunds was 163.193 billion naira. The balance in the excess crude account was $473,754.57. Now, President Bola Ahmed Tinubu says he is committed to sustaining the removal of fuel subsidy and the unification of Nigeria's exchange rates, as these measures are expected to contribute to the creation of a more competitive economy in the country. President Bola Tinubu gave the assurance when he met the African Export-Import Bank and the European Bank for Reconstruction and Development presidents in Paris, urging other investors to take advantage of the opportunities. President Tinubu further stated that his administration will continue to implement policies that stimulate the economy and support investments in sectors where Nigeria holds a competitive advantage. He specifically highlighted the significance of Nigeria's infrastructure, health, energy, and agricultural sectors, which he believes offer great potential for investments.
What support we could continue to give to businesses and banks under the environment, and as well as to NNPC as they implement the new pricing regime for oil products. He reaffirmed the support of the government of Nigeria for the bank and also for continued active engagement with us. So we are really very pleased with that because it paves the way for us to continue to do what we are doing in the country.
Also in Paris, the World Bank has announced that developing countries like Nigeria will be able to pause their debt repayments if hit by climate disaster under plans announced at the Finance Summit in Paris. It said it will insert new clauses in any agreements with developing countries like Nigeria, allowing them to suspend debt payments in the case of extreme weather events, starting with some of the poorest and most vulnerable nations. The UK also said it will apply similar arrangements to its loans to 12 countries in Africa and the Caribbean. The World Bank says it will only apply the clauses to new loans, and the announcements do not add up to the debt forgiveness that some countries would like to see. Now, it's no longer news that the Central Bank of Nigeria directed deposit money banks to remove the rate of cap on the naira at the official investors and exporters window of the foreign exchange market to breach the gap between the official and parallel market rates of the naira. Since then, the naira has fallen from 460 to about 752 naira to the dollar at the official investor and exporter window, about 815 naira to the dollar in the black market. Economy watchers predict that Nigeria's exports may rise to at least 41.9 trillion naira in months to come after naira devaluation. We have joining us from Lagos, Ayodeji Ebo, an economist, managing director at the Optimus by Afri Invest, for his view on the expected effectiveness of naira devaluation on economic growth in Nigeria. Hello, Mr. Ebo.
Yeah, good afternoon, and thanks for having me.
Okay. Well, to begin with, can you give us your take on the unification of the naira by the CBN?
Okay, thank you. I think the unification of the foreign exchange is a positive move. However, that is not a silver bullet in solving our FX problem. So that is just only one step. And our view is that then it needs to be backed up with supply, because if it's not backed up with supply, it means that we would go back to the normal situation where we have that divergence between the official and the parallel markets. And now that we are pursuing, we call it a crawling peg, which is that means that we'll continue to see the depreciation or devaluation of the naira. So I would say it is a bold step. It's a positive one, and it's effectively taking away speculative transactions or round tripping in that market.
Okay.
No subsidized FX for anyone again. And that would in itself now boost revenue even for the government. You know, the FAC allocation conversion used to be at the FI&E window, that's the NAFEX rate, which was around 464 naira to a dollar. Now it's almost going to increase by almost 60, you look at the valuation, let's say like 30% rather, which would have more revenue for the government to distribute, both from the federal to the state and the local government. So I believe it's a positive one, but for us not to waste this um, step, we need to support it with supply. That's even from the CBN. So with that, confidence will improve and we begin to see more inflow through the official market.
Now, before that happens, would you say the timing is right?
Yeah, I would say the timing is right, because you would also agree with me that 80% of Nigerians were accessing dollars at the parallel markets. So we don't expect much impact on imports. When I say import, products that are imported into the country beyond crude, we don't expect much impact because most of them have been buying dollars in the parallel market. So it's just like we're playing the ostrich. That should have been done a long time ago and supported with supply. We may not be at this current level if we are taking that decision a while ago, but it's still better late than never. But one condition I will continue to emphasize is to boost confidence. Supply is also very key if we don't want to waste this move. Thank you.
Okay, before I go to the next question, there's this question I would like to ask you. In your own opinion, which policies do you think should accompany this so that to boost supply of the required dollars we need so that to like stabilize the market?
Okay, thank you. Firstly, short term is that CBN needs to be bold to supply more to the market. So that, and they also need to clear backlogs. Even if our reserves would deplete by another 10 or 15 billion dollars, and there's confidence, I believe it will increase over time again. We'll begin to see inflow. Secondly, there's a need to work on interest rates. Yes, why the government wants a lower interest rate, there's what we call the trilemma. So it's very difficult to achieve a stable exchange rate, and you also want to achieve positive growth rate, and your interest rate, you also want it to be low. Um, Also, sorry, lower inflation rate, and you also want your interest rate to be low. So I believe in the interim, interest rate also has to move to attract foreign portfolio investors. Yes, it may have its impact on companies in terms of cost of funds, but FX too, if it moves, it also impacts on the cost of production because most inputs to production has FX elements. So there needs to be a balance. So if we're able to do that, then in long term, we need to work more on increasing our exports, trying to work on the process of exporting through even the Apapa port and the other ports to make it seamless. Look at those products and see how we can begin to provide support for exports. And that will generate more earnings for us in Nigeria, and we will begin to see that that improvement in supply. Overall, if we sustain this unification, round tripping would be taken care of, speculations, speculative opportunity will be taken care of, and would begin to see that reality. Everybody can plan, and there will be confidence in the economy.
Okay, now, yesterday, President Tinubu says removal of fuel subsidy and the unification of Nigeria's exchange rates are expected to contribute to the creation of a more competitive economy in the country. What do you see playing out in the financial markets?
Okay, thank you. So what I believe would help, we would see, looking at the oil and gas sector now, we'll begin to see more business activity within that space. The NNPC has been the sole importer of PMS within that space. So we heard that about 6 companies were also licensed. So we'll begin to see activities, we'll begin to see also refineries also spring up, and they'll sign off take arrangements. So we'll begin to also see that that would improve activity within the oil and gas space. And we believe that while it's really going to be painful now, we need to begin to see that support. I will not say direct palliative. So the savings, the implied savings, should begin to be channeled into infrastructure to ease business. So if we see that they begin to ease business, and why insecurity has to be taken very seriously. I was speaking with a very a farmer some days ago, and stating that a lot of the farmers in the north had almost even moved to almost Abuja. They could not farm, but a bit of maybe. So if we can sustain that, food inflation will come down if we can easily plant this season. And that, with the commodity exchange that is also being set up, would also help in normalizing prices over the year.
Okay, some experts said the value of Nigeria's export may rise to at least 41.9 trillion after the floating of the naira. How do you see the floating of naira affecting our exports?
For exports, what I see is that it means that you require more naira to export. That's the implication. Yes, we require more naira to export, and that effectively will reduce the demand. However, it makes our goods also very competitive and increase naira revenue, because when we export and earn dollars, it increase our dollar revenue. So we believe that over time, if we ramp up our exports, that will also increase our naira revenue, and that would help or improve. So people would see our goods will be more cheaper, based on the devaluation, and will begin to set up factories. But it's not just about the devaluation and the amount of naira revenue that we get. There are a lot of other policies, and that's why, based on what is being said, there needs to be a sync between the fiscal and the monetary policies. We need to take care of insecurity so that it will be more favorable for people to set up companies in Nigeria. Power, can we do a lot to save the cost of power by the time they set up power station and improve power generation in the country, so that it is cheaper to produce in Nigeria rather than producing in neighboring countries to create more jobs? Yeah.
Okay, well, before I let you go, the dollar seems to have become a kind of more scarce since the devaluation. In the aviation sector, for instance, airlines have increased fares in the last few weeks. Can that be attributed to forex scarcity?
Okay, thanks. From what the news on the streets, I don't think CBN has really intervened in the last few days. So there's a need for CBN to supply and increase dollars. There's a need to clear backlogs. So if we just remove the peg, we will not achieve unification, because demand, people are just still waiting whether they can get dollars at the official window. For those that are those that are allowed to
Okay.
access dollars within that space.
Okay.
However, those that are not allowed, they will continue to go to the black market, which will cause a lot of disparity. Thank
Okay.
you.
Okay. Thank you very much, Mr. Ayodeji Ebo, an economist, managing director at Optimus by AfriInvest. Thank you for sharing your thought with us. Now, moving on, are you a furniture maker without a facility for production, or a garment maker, or you have a good product with poor packaging? The good news is the federal government, through its MSMEs agency, Smeden, says you don't need to invest your hard-earned capital into having a workshop, as Smeden is establishing common facility centers across the country, in addition to connecting small businesses to markets to ease the impact of the fuel subsidy removal.
It's not free. The only thing is that it will be highly subsidized, because government has invested a lot. We need to be able to recover some of the costs so that we'll be able to do more. In Panteka, in Kaduna, we already have common facility for auto mechanics. In Nnewi, we have for some other group. In Lagos, we already have a product packaging facility at our Ikorodu IDC. In Katsina, we also have for garment making. So we want to come up with a broad guideline, but definitely it's going to be properly structured.
It has been 3 weeks since fuel subsidy removal, and Nigerians have continued to decry the attendant impact on their daily budget and livelihoods. Correspondent Mupulanda Kok reports on the situation in Abuja, where food prices and transport fares for intrastate and interstate commuting, among other services, increased significantly.
Prices of food items and other essential goods and services have steadily increased across the country since May 29th, when President Tinubu announced complete removal of fuel subsidy. It was no surprise, therefore, when inflation figures for May 2023 came in with an increase of 0.19% to 22.41% from 22.22% in April. It's been 3 weeks since the removal of fuel subsidy in Nigeria, and I'm here at one of the corner shops within the city of Abuja, where I found out that prices of some items have remained stable, while others have increased reasonably.
Since before the increasement of the fuel, we are selling our meat. The kilo is 2.8. Up to now, we are still selling it the amount we are selling it like before. Nothing has increased.
Before I'm selling 250. Now it's 300. I'm buying carton of 6,000. Now I'm buying 7,000.
Charges for many other services also increased considerably.
Normally, our retouching was 1,000, but now we do for 1,500. Then washing we do for 500. Now we do for 800.
Had to wash my hair at home to reduce the costs.
Photocopy was 30 naira before the removal of subsidy. Right now it's 15 naira for an A4 copy.
We also visited some motor parks within the city where we found out that taxi fares have increased by about 100% in some cases and 50% in others.
You know, it's 200 naira they carry passenger before, but now they are putting 300 naira. As it's 300 naira, they still complain, say it's too much. But there's nothing I can feel.
We are not finding this so difficult. Even before, you can walk and go home with something. Now, our wives now even suspect us that we are going about, because we're not coming back with something again.
The removal of fuel subsidy is a popular decision that all Nigerians are expected. However, it is now clear that it's not only the rich that enjoy fuel subsidy has been saying, as people say more, but now you agree with me on that both the poor and the rich benefit.
For the government to find a way of ensuring that commercial bus drivers, for example, can buy fuel at subsidized prices from NNPC filling stations.
Experts also insist that government must rechannel the funds from the subsidy into increased investment in public infrastructure, education, healthcare, and jobs that will improve the lives of Nigerians.
Oil prices fell for a second straight session Friday, and we're headed for a weekly decline of more than 3% on Friday, as a higher than expected interest rate hike in Britain and warnings about looming rate rises in the U.S. ignited concerns over demand. Brent crude slipped 91 cents or 1.2% to $73.23 a barrel, while U.S. West Texas Intermediate crude was down $1.22 or 1.8% at $68.29. Let's now see how other commodities are trading around the world. Next is global stock markets.
Bank of England delivered a hawkish surprise Thursday, hiking by 50 basis points after base wage growth and inflation figures came in hotter than expected. European stock markets were choppy Friday after 4 sessions declined. Asian markets were lower Friday as investors looked to inflation data out of Japan and Singapore. Hong Kong's Hang Seng Index dipped 1.71% in its final hour of trade, leading losses in the region as it came back from a public holiday, dragged by healthcare and tech stocks. Mainland Chinese markets are still closed for a public holiday. In Japan, the Nikkei 225 pared some losses, but still fell 1.45% to 32,781.54, ending an 8-day run above the 33,000 mark. For Africa, South Africa JSE Africa Top 40, Tunisia and Namibia's overall index on the negative lane. Bosede Ebo, Business Express.
Wow, that's it. This is where we end this edition of Business Express, the last for the week. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on the NTA's channel. Business Express returns next week. I am Musa Bakar.